Good morning, good afternoon, good evening, and welcome back to the Thai Expat Daily Show. I'm your host, Kira Mack, and delighted to be back today. Now, taxes. It's the topic that has every expat in Thailand buzzing, especially with the recent changes to the Revenue Department's tax rules. But don't worry, we're here to help you make sense of it all. Today, I am joined by two fantastic guests from Expat Tax Thailand. Mr. Carl Turner, co founder and expat spokesperson, who's made it his mission to simplify tax compliance for expats, and Dr. Sarawut Intapanam, senior advisory consultant, bringing his deep knowledge of Thai tax regulations and strategic insights. Now, just to be clear, this is not a paid advertisement. Our goal is to give you the information you need to understand and navigate these rules without stress. So grab a coffee, relax, and let's dive into everything you need to know about expat taxes in Thailand. Good morning, Carl, and good morning, Dr. Sarawut. You're very welcome to the Thai Expat Daily Show. So, as always, we have plenty of questions today for you about these new tax laws that have come into effect and that will start to affect expats in the coming weeks, with the filing period starting, I think, January 1st. Well, we're going to start off with the first question to both of you. Who are Expat Tax Thailand and what exactly do you do?
Hi, Kieran. I'm Carl Turner from Expat Tax Thailand, and I'm the spokesperson for the company. And we really help expats understand their Thai tax filing obligations so they can make better informed decisions. So our main goal is to really explain the Thai Revenue Department's personal income tax rules in simple terms for expats so they can figure out if they need to take action or not. So I'm joined by Dr. Sarawut, who's one of the Thai shareholders and advisors at Expat Tax Thailand, so he could share a bit more about what we do, if that's all right.
Yeah, thanks, Carl. Thanks, Carl. Hi, Kiran.
Good morning, Doctor.
Expat Tax is the Thai company registered in Thailand. The majority of the shareholder is the Thai, right? We have the teams of the Thai accountants plus the advisor that they are the guru of the tax in Thailand, working as a team to advise our customers. So our team is ready to explain the change to expat in a simple terms. Carl is spokesperson to the foreign. Yeah. However, all the work, advice, account are handled by myself and my team.
Okay, very good to know. And thank you for introducing yourselves and letting us know. Now, I guess the big question that every expat in Thailand wants to know are the Revenue Department going to be taking these new tax laws seriously?
Yeah, yes, absolutely. Because if you can see on the website, the Thai Revenue Department has produced tons of useful materials. We are regular contact with them. So everyone in Revenue Department that we has been contact said they're trying to make it clear if the people have the filing obligation, they expect expat to follow the rules. This isn't something to ignore, to be honest, but the Revenue Department has also transparency from overseas accounts. So thanks to the agreement with over 120 countries as part of common reporting standard. So if you have a tax filing obligation, it's crucial to remain compliant.
I guess my next question, follow on for that, then would be how does the Revenue Department define tax residency for expats here in Thailand?
Yeah, okay, might be good for me to answer this. So anyone with any visa type, it doesn't matter what visa you've got, whether it's marriage visa or retirement visa, doesn't matter. It's about the amount of days that you remain in Thailand or the sources of income. So anyone that has a domestic income, Kieran, so if you've got a Thai rental property or a Thai salary, you have to file a Thai tax return. That's a given. But even if you stay in Thailand for 180 days or more, that's the definition of a Thai tax resident. If you bring in, so transfer, remit, spend on any overseas card, what the Revenue Department class as foreign source income, so pension income, salary from overseas, dividends from overseas, investment capital gains, or rental property income. If you spend that in Thailand, then that's what you need to file on a Thai tax return. So unless the income's excluded, so there are some things, Kieran, that are excluded, like US Social Security and Canadian pensions, for example, but most overseas income sources, if they are brought in, spent in Thailand, remember it's a remittance tax basis, which means only if it is remitted, spent, transferred into Thailand, then that needs to be filed on a Thai tax return. So very simple. If you're less than 180 days and your income is all from overseas, then there's no tax filing obligation. If you're over 180 days or more and you bring it in, remitting foreign source income, potentially you need to file a tax return. And if you've got domestic income, rental income or salary, doesn't matter how many days you stay in Thailand, you've got to file a tax return.
Yeah. Okay. And I guess you kind of brought the kind of answers. My next question is, what income is taxable under the new rules? I think you've gone through a lot of it there already, but is there anything else that you could add to that?
So it's pretty obvious. If you've got investments overseas and you sell those and you make a profit, so you've got a capital gain and you bring that money into Thailand, so transfer that to Thailand or spend it on an ATM card, for example, that's assessable income, the capital gain part. Also, like pension income, so if you've got a pension being paid overseas, and it's not excluded. So there's not many. So if you've got civil service pension, like you've worked for a government, or you've got military pension, they're usually excluded. And also US Social Security and Canadian pensions. But the majority of other pensions, if you bring that into Thailand and you're here 180 days or more, it's assessable income. Also, if you've got a rental property overseas and you transfer that money into Thailand, that's assessable income. Or like crypto capital gains. So a lot of people have been asking, what about if I sell my crypto overseas and bring that money to Thailand? Yes, the gains are taxed same as investments. Yeah.
Okay. Now, I was going to ask you another question, but you've actually answered that one. So where can people who are confused find out more information?
It's very simple. So visit our website, expattaxthailand.com. Access the free resources, videos, and articles. We have tons of very useful videos ready on there. And all video has proved by the revenue department. So it's guaranteed that this is exactly the same what they mentioned in the revenue department. Second, sign up for the tax alerts to stay informed about updates and changes to tax rules in Thailand. Also, book a free 15 minutes consultation from our website to discuss a situation with my team or maybe with Carl. Yes, we are ready to help. Don't hesitate to contact us anytime you want.
Absolutely. And for anybody watching, all the details will be down in the description as well. So I want to move along to some kind of more in detail questions, I think, which our listeners will be quite interested in. So how does the Revenue Department define a remittance under the new tax rule? And does this include, platforms like Wise or PayPal or any of these that we see more prominent now?
Yeah. Okay. Yeah. Good question. So what is a remittance? So remember, Thailand's a remittance tax basis. You're not taxed on your worldwide income or assets. It's only if you transfer or spend the money in Thailand. So what we need to look at whenever someone's using something like Wise or any other transfer platform is where did the money originate from? What's the source of that money? So, and then we look at, is that money taxable or not? Is it assessable income? So let's say, for example, Kieran, let's give it a good example, right? Let's say I'm a retiree and I've got a Swiss pension and I've getting that paid into Switzerland. And I then send that money to my Wise account. And then from Wise, I transfer that into Thai baht into Thailand. What we look at is, okay, the money's come from Wise, but where's the original source of that money? And it's pension income. If the pension income was paid in a Thai tax year and that's been brought into Thailand, then that's assessable income, if that makes sense. So we don't really care where the money's come from. It's actually what's the source of that money and is that assessable income? Does that meet the criteria? Does that make sense? Or?
Yeah, it does. Yeah, I think it does. Yeah, I think most people would understand that. Yeah, it's a good explanation of it. And then I guess another thing is, if you're using like an overseas credit card to make purchases in Thailand, does that count as an actual remittance?
Well, I would say this isn't explicitly in the revenue code. Anyways, the revenue department is considering by the accessible income. Yes. So I can say it like if the credit card is using taxable income, it could be considered as tax evasion. But if you are paying of using the pre-2024 cash or non-accessible income, it's not taxable.
Yep,
Yes.
that makes a lot of sense.
So I guess it really depends how you're paying off that credit card.
Yes.
That's the key. And
Right. So where that money that you use
Where
to pay off
it
the
comes
credit
from.
card has come from.
yeah,
Exactly. Okay.
if you look to someone who's trying to use a credit card to use foreign source income that's taxable, and then they're using that to pay off credit card and then spending that here, then you've got to look, does that follow the spirit of the tax rules, which is
Yeah.
always the, it's not in the rule book.
Yeah.
Yes.
I guess then that leads on to, what about withdrawals from overseas bank accounts using your overseas ATM card?
Well, it's
How
the
does that
same,
fall into
same
it? Same thing.
principle, Kieran, same principle. So we can use first in, first out method. So whatever's in that bank account, if you've got money that's not taxable, like pre-2024 savings, okay, fine. But if you've added money into there, you can use first in, first out method to draw down it's not accessible income. But it all depends, where's the source of the money that's on the ATM?
Oh, okay. Yeah, because you hear a lot of people, they're like, well, I'll just use my ATM card. I won't transfer money, into my bank account anymore to kind of avoid this trail of money. But in fact, they probably can see that you're doing this as well with the new common reporting, right?
Yes, correct. Yeah.
So the hiding.
Well, Kieran, it's quite interesting. So one of the major banks here, K-Bank, actually sent to all their account holders last week an email to ask for CRS information. So where are they a tax resident, asking for tax ID numbers for wherever they are a tax resident, and if they've got a filing obligation. It's becoming, the banks in Thailand will start to collect that data on behalf of the Thai Revenue and CRS and FATCA that push this onto the banks.
Well, they have to be compliant too, of course. So that's the reason behind it. So
they're obliged to collect this information on behalf of CRS and
yeah.
FATCA,
So yeah,
actually.
I think that the crazy schemes I've seen online with people talking about credit cards and ATM cards probably not going to work like they thought.
Yeah.
I think that really is, part of it. Now, I want to move on to what types of income or assets are not taxable in Thailand. Things like inheritance or even pre-2024.
Yeah. So just to reassure people, it's not everything that people are bringing into Thailand that's taxable. It's only certain types of income. And the Thai Revenue is, very clear on what is and what isn't taxable. So in November last year, 2023, they actually announced that cash in the bank as of the 31st of December 2023 is not accessible income. So that can be brought in any time in the future. So cash balances as of the end of 2023. Also, any inheritance received overseas, that can be remitted into Thailand. It's not accessible income. Things like if you were income that you've earned in a non-Thai tax year. So let's say you stay in Thailand less than 180 days and the income's from overseas, that can be remitted into Thailand anytime in the future. Some loans, if they meet the criteria, are not accessible income. And let's say you've got an investment or property, sell it, you don't make a gain. Let's say you make a loss, you can bring that in. It's not income, it's only on the gains.
Okay, so it would only be profit on that property, for example.
Right.
Okay, I get you. Yeah.
So just to reassure people, it's not, the Thai Revenue are very fair with it in terms of what's taxed and what's not. People just don't need to worry. They just need to understand what are the rules for their circumstances.
Absolutely. Now, how should expats prove that certain remittances are non-taxable? I think that's something people will be very curious about as well.
Yeah, right. So, as with all revenue departments, it's up to the taxpayer to keep a good record and prove where the assets are from if they're asked. So it's important when people are transferring funds to Thailand that they document where the source of funds are from, with the transaction history, keep an evidence on file for funds that are transferred if they're not what we class accessible income, so that if you are asked for it, you can show it, because it's up to you to prove, up to the taxpayer to prove that this is not taxable. So people don't need to worry. Most banks, you can download the transaction history and the account balances from previously. So yeah, quite simple for people to do. It's a new thing in Thailand for people to start to deal with.
But I think they're just coming in line with the rest of the world, really, too. It's nothing different if you live, in other countries. This is what they do as well.
Well, Kieran, I mean, if you open a bank in Europe, you have to fill out this CRS information when you open the bank. It's just now Thailand's catching up because they signed CRS in 2020, rather than be one of the founding members in 2016, like Ireland, UK, Australia, for example. Well, now they're just catching up and doing the work, asking the clients for the data now.
Yeah, and it'll become, and if countries are not doing it, they will eventually start doing it anyway. So it's time to get, I think it's time to become compliant, I guess. Now, you touched on it earlier, but I want to talk about cryptocurrencies. And I mean, you spoke a little bit about it, but how are cryptocurrencies treated under the new tax rules? And are crypto gains taxable if remitted?
Yeah, so very good question. We've got a webinar on crypto tax. The Thai Revenue Department have done a lot of work to add how crypto is taxed in Thailand into the revenue code. So it's very clear. If you have cryptocurrency and you remit into Thailand and you have a gain, then you are liable to file that on your tax return if you are a Thai tax resident, so 180 days or more in Thailand. So it follows the same rules as investment capital gains. So yeah, exactly the same.
Okay, very good. And if crypto gains are taxed overseas, can expats claim relief under the double taxation agreement?
Yeah, so really interesting with double taxation agreements. The 61 that have been signed between Thailand and other countries, and this really sets out how things are taxed. So you've got an asset and you've already been taxed in another country. Let's say you've got a pension or you've got an investment or crypto, for example, and you've been taxed in another country, jurisdiction. Then depending on that double taxation agreement, you can potentially use the tax paid as a tax credit. You still have to file a tax return in Thailand, depending on the asset type, but then you can potentially claim that tax credit so that you don't have... So Thailand's Revenue Department have done a very good favor for people that you can claim these tax credits. You still have to file, but it might mean it's not as bad as people think.
It depends on does it depend on the rate that you've paid in that country versus the rate that you would have paid here in Thailand, right?
Exactly right. And also what you've remitted in. So It depends what you've brought in. Yeah.
Okay, very good. Now, again, on cryptos, final question. What documentation should expats maintain to accurately report these kind of transactions?
Yeah, good question. So it depends what they're doing, if they're trading or they're just holding and selling. Because how we calculate the capital gains, we've got two methods. So they can use moving average cost or first in, first out method. So they can decide how they calculate the gains. If they keep the full blockchain transaction records, including all the trades, sales, transfers, they've just got to keep a clear record. So if they do send the money into Thailand, you can clearly show, okay, how much of that is a capital gain? And does it meet the criteria to file?
All right, that's interesting. Now, we move on to the double taxation and relief. So how do double taxation agreements function to prevent the double taxation? Now, you touched a bit on it there, but we could go a little bit more into detail for people, because I've seen a lot of people confused about this as well.
Yep, clear. So what we see a lot of the time is people commenting saying, well, there's a double taxation agreement in place, so it means I've already paid the tax, I don't need to do anything. Well, that's not necessarily the case. For the majority of people, they still have to file a tax return if it's accessible income, but then they can use the tax paid as a tax credit, depending on how the double taxation agreement explains for that type of asset. Just remember that it's not for your nationality. It's to do with the asset that you've got, that jurisdiction. So let's say I've got an Australian pension and I'm from the UK. what we do is we look at the Australian Thai double taxation agreement and what that mentions about pensions rather than the UK Thai double taxation agreement, if that makes sense.
Yeah, I think some people think it is the nationality of where they're from rather than where maybe the money's coming from, I guess, as well.
I think we've done 8 webinars now for different nationalities for double taxation. So, there's a lot on there already on our website. Put a lot of content out there. But if you do have any specific questions, these are the types of things that we can help answer. Is how are certain assets taxed? We're happy to help because it's confusing. And until people understand, if they do need to do anything, then they can't make a decision. So it's up to them to understand what they need to do, if they need to do anything, and then it's up to them to decide how they move forwards.
I understand. Okay. And just finally on that, what kind of documentation is required to claim your tax credits or exemption under the DTAs?
Yeah, that's a good question. So we need tax certificates, proof of the income that's come in, and evidence that the tax has been paid in a different country. And so with differing tax years, it can get quite confusing, but we're here to help. We've got a service to help file for tax credits called assisted tax filing, where we take care of all this for people. But it's important to keep a good record of the funds that transferred, where it's from, and then if it is from something that's already taxed, you need to keep a good record of how much tax has been paid and where, and then that's when you can file that. It sounds confusing, but that's why we have a job.
Yeah, absolutely. Because I don't think people think about these things a lot at the time too. And a lot of people, I don't think, keep very good records of what they do, maybe especially people who've been living in Thailand who have never experienced what, the new rules are. So they haven't really been keeping track of things too. I think that will come into play a lot.
But I mean, if people would like, to arrange a quick call, like a 15-minute call with one of my colleagues that can actually just help them and explain what they need to do and really clear up these questions, because it's not as complicated as it sounds, to be quite frank.
Yeah, absolutely. Now we'll move on to another question. I'm going to kind of add these two together, but what steps do expats need to file their tax returns accurately? And are there any kind of simplified options for expats?
Yeah, okay. So if someone has a Thai tax filing obligation, so like we mentioned with the criteria, either they've got domestic income or they're in Thailand 180 days or more, and they bring in those foreign source income, salary, pension, or capital gains, then they need to calculate how much money did they remit and bring into Thailand that is taxable. We calculate out the assessable income, take off the allowances, deductions, and then they've got a few options. One, they can file their own taxes by visiting their local revenue office, fill out the paper forms, provide all the evidence and do it that way. Or they can file online with the revenue department. Or, for example, we have a paid filing service, all online, fully remote through our client portal. So people can do it convenient from their own home. We guarantee all the allowances and deductions. And like I mentioned, we're here to help to talk them through the process.
Very good. That's very, very good. Because I think, some people find it quite daunting going down to the tax office. And, I think we spoke before about this, but, having to get even a Thai tax number as well. And that whole procedure that goes around it too can sometimes be a bit time consuming for people.
Yeah, that's right. Yeah. So, I mean, to get it, if people do need a Thai tax ID number, then again, they can visit their local revenue office and they can actually obtain one for free. They need to provide all the documentation, visit the office, and then what the usual process is, they drop everything off and then they'll get called to go and pick that up. If people do want help with this, we do have a service to obtain TINs on their behalf. It's a paid service, but like you mentioned, a lot of people just don't want to deal with the bureaucracy. So, we can help with that if people...
Yeah, it's a good service, I think, too, personally, So how will the Thai government enforce these tax rules for expats?
Well, it's basically up to an individual to file a tax return. So the current tax year ends on the 31st of December. And you need to file a tax return by 8th of April if you're filing online next year. So you've got 3 months to file, three full months to file. Thai Revenue actually receive all the information now from all the common reporting standard countries. So they have transparency on on people that are living in Thailand now on their other accounts. So people are expected to, if they do have a Thai tax filing obligation, to file a tax return, which a lot of people haven't done before. But yeah, that's how they will, will wait for the returns to come in. Obviously, you can audit people that don't file a tax return, and they can investigate up to 5 tax years if that's the case. But it's not to be daunting, because it's really easy to be compliant. And
yeah.
Majority of people, Kieran, it's a filing obligation because they've probably already paid tax on some of this already. So it's more of an admin issue than a punitive tax burden. The revenue, they provided quite a lot of information. It's quite easy to do. But yeah, if they do need help, we're here to help.
Yeah, I always found the revenue department quite helpful, actually. When I was doing things, I mean, my company pay my taxes, but when I'm doing my tax return, even when I had questions about credits or anything like that, I always found them, pretty helpful and pretty upfront about things, and I'm pretty fair when it came to things as well. So I think that's
Hi, Kieran. Sorry, just one thing, like we have discussed with the revenue department last night.
Very good.
So they told us that sometimes the foreigners found very difficult to get in to their website and couldn't find English version. So they allows us to produce all in English version to our website, and they are helping us to prove is this right now. So if you found difficult to find those documents in Revenue Department website, go into Expat Tax website. I think it's pretty clear, and it has been proved.
Yeah, it can be I think a bit, when filing, a bit daunting too, because I think it's all in Thai, and sometimes you're relying on translate to translate it accurately for you, but it's not 100%, and thinking can cause problems sometimes too. But I know it's good to hear that that service is available as well. So I want to pop on to a couple more questions I have. So you touched on it at the very beginning, but it's about US pensions, assets, and social security payments. How are they going to be treated under this new Thai tax rules?
Yes, Kieran. So as it's Thanksgiving tomorrow,
That's right.
we're actually putting on a webinar that people can download afterwards. They can click on and listen to, explaining exactly how US assets are taxed in Thailand. So from social security to 401k to Roth IRAs, how that's taxed. So for US, it's a bit different. If social security is actually excluded under the double taxation agreement. So that means that it's not assessable income in Thailand. So if they're just bringing in social security, or they've got a civil service pension, so like a military pension, or they've worked for the US government, they actually don't need to file a tax return. That's not assessable income. Now, if, Kieran, they do have other income sources like 401k, and they're bringing that in, only remitting if they bring that in, or they've got an investment account, let's say with Charles Schwab or something, and they sell assets and then they bring that into Thailand, then if they've made a gain on there or they've brought in that pension, then it's likely they might have to file a tax return in Thailand for those specific assets. So it really depends for Americans what they're bringing in.
Okay. I guess kind of that answers this next question, but does the Revenue Department have different policies for expats from different nationalities?
Yeah, well, that's where we look at the DTA, the double taxation agreements. And, each different type of asset is taxed differently. Some double taxation agreements exclude certain assets for tax. Everything's on our website. Just search for your specific asset type. I think that's the best way. So, for example, Canadian pensions are excluded as well. But let's say British pensions, they're not excluded. That means you have to file. You can claim the tax back. For example, Netherlands pensions, they're not excluded. They have to file. And if they've paid tax, which is unlikely, then they have to claim that back. So it all varies.
All right, very good.
Here to help. It's not really...
Another question that I guess everybody will ask, and it's been asked a lot, is what information does the Revenue Department already have about your income and your assets? Or do they have any, or what exactly do they have right now?
Right, yeah. I'll answer this one. Basically, with common reporting standards, it's what the purpose of this is to stop tax evasion and avoidance on a global scale for all of the countries signed up. So of the 120 plus countries that have signed up, there's automatic exchange of information through these various countries. What does that actually mean? So let's say I'm from the UK. I've got a UK bank account. And what actually happens if I'm a Thai tax resident is that information from my bank account is sent from my bank to the UK Revenue Department. Then the UK Revenue Department do whatever they wish to do with that data. And then every year they will send that information to the Thai Revenue Department. So that information is sent to Thailand every year. And that's the same for all common reporting standard countries. So now Thailand signed up in 2020. And last year is the first year when they were able to receive the first set of data from all of the other countries. So now they received the information in an XLS file from all of the revenue departments. So they've got transparency on this. But it's up to taxpayers in Thailand, tax residents, to either file a tax return if they need to, or not if they don't meet the criteria. It's not just because that information's been sent doesn't mean that's all they have to do.
Okay. So I have two more questions for you today. So for a second last question, what penalties could expats face, if they're non-compliant?
Yeah, so like all revenue departments, penalties for non-compliance, they're pretty harsh. It includes fines, interest, and even jail time, extremes. But the Thai revenue, they've made it very easy to remain compliant, and the rules are very clear. So if you do meet the criteria to have to file, and you file correctly, you've got nothing to worry about. So if people don't file on time, the penalties, which are 1.5% of the tax that's owed per month since it's been owed. And then if someone doesn't file and the revenue audits them, then the penalties, like all other revenue departments, are pretty harsh. Now, these can be fines up to 200% of the tax that's been avoided or evaded. Interest, 1.5% per month since it's been owed. And then obviously this can have implications for people's visa renewals. And in extreme cases where the fine isn't paid, then the revenue has got the authority to issue criminal charges, including things like jail time. But that is obviously on the extreme side of things. It's not to make people worry and panic. And the easiest way is just to remain compliant and understand the filing requirements. Check to see if you do have to file for your circumstances. That's important because not everyone does. And just remember, if you don't have to file, you don't need to get a tax ID number. You don't need to do anything. But if you do have a filing requirement and you file your taxes correctly, then you've got nothing to worry about.
And the final question of today, I guess, can expats get personalized guidance from the Revenue Department or people like yourself at Expat Tax Thailand?
Yeah. So the Revenue's website has a lot of information on there. What we've actually done is write a lot of articles, webinars, videos to really help people understand the rules. If they'd like to reach out to us to get guidance on their own circumstances, feel free to get in touch. We've got a Thai team ready to be able to serve expats in Thailand to help them better understand their tax filing obligations.
Okay. So thank you very much, Dr. Sarawat and Carol, for joining us. All the information about this will be in the description. So if you need any help with your taxes, I'll leave all that down for everybody to check it out. But once again, thank you for joining us today. And we'll talk again in the future to bring more information about this, maybe in the new year with both of you. Thank you very much, guys.
Thank
We're
you
happy
very
to
much,
help.
Kiran.
Thank you.
All right. Well,